We've had an amazing year so far. In 2025, Google's up 50%, Nvidia's up 50%. Investing is easy. Everyone is a stock market genius. But investing has been so easy that we're on our way to the third year of 20% plus of stock market returns. And that doesn't really happen very often. Once we have 3 consecutive years of double digits, 10% plus returns, the fourth year tends to be a really negative year, or it tends to be a choppy year in general. You could see it here: 2 years of positive returns, a very red year; 3 years a negative year; 3 years a negative year. Maybe this time is different, but I believe there's a lot of indicators and there's a very high likelihood of a decent pullback in the first half of 2026, mainly between January and May to June. I'm going to tell you why. I'm going to give you everything that my thesis on it in the video and tell you what I'm doing about it. And again, I'm not trying to time the market, but I like to look at such indicators and look at where we are in the market cycle and determine if I should enter 2026 being a little bit more greedy, or I should enter 2026 being a little bit more conservative and fearful. So I really hope you enjoy it as always. Now, for the record, back in 2024, I uploaded a video of why the stock market will likely crash in 2025. And it actually did happen, but I was wrong, and I thought that we would end 2025 negative. I was not expecting such a magnificent recovery, but it did happen. But due to me looking at a lot of things and looking into that and likelihood of that happening, I had a lot of cash and I did a lot of things in my portfolio. And this is why I was down 50% less than the NASDAQ in the Q1 pullback, and in Q2, I pretty much destroyed the NASDAQ. But then I made some mistakes and I was not aggressive enough. But in the first 2 quarters, I did really well, and I'm going to share them with you. But even Michael Burry is back, and he's warning of a potential pullback. He said, sometimes we see bubbles. Sometimes there's something to do about it. Sometimes the only winning move is not to play. And a lot of people are making fun of him because he said sell back in January of 2023, and since then the S&P is up like 50% or 70%. But the fact that everyone is doubting him and making fun of him, I think it gives him a higher likelihood of potentially being right. And he was right about the 2022 crash, and I used a lot of his tweets to prepare for that back in 2021, and he was very helpful. But looking at valuations in general, we're trading around 23.5 times forward earnings. This is much higher than, pretty much a little bit higher than the 2021 peak, and we're approaching dot-com bubble levels of 25 times forward earnings on the S&P 500. So the S&P 500's multiple is definitely getting extended. But as you guys know, valuations are terrible timing indicators, and the S&P could pretty much remain overvalued forever. So there's one indicator that I look at that is very important to me. It has 100% accuracy, and this is the yield curve. The yield curve is the 10-year treasury minus the 3 months treasury. And this indicator has pretty much predicted all recessions, or all, you could say, major stock market pullbacks. Anytime it inverts negative and it reinverts into positive territory and it starts accelerating within 3 to 6 months, sometimes 9 months, we tend to have something bad happen. 100% of the time. You can look it up. It happened, it reinverted a positive in 1989, 1990. We had something really bad happen. It had the positive 2000, 2001. We had the dot-com bubble, dot-com stock market crash. Same thing in 2006, 2007. We had something with the 2008 financial crisis, and it even went negative before COVID, and it's been negative for a while, and it's finally reinverting, and it's starting to go up. Now, if it keeps on going up, again, it's been accurate 100% of the time. There's a very high likelihood of something bad happening in 2026. It could be anything. It could be maybe due to some regional banking noise that is happening right now. It could be some kind of a black swan unexpected event, or it could be as simple as a lot of stock market participants changing their mind on the capital allocation plan of the big 7 stocks. All the big 7 stocks, they're spending tens of billions and hundreds of billions on AI CapEx. Meta has been going down recently. It's leading the way down. from the big seven, mainly due to their capex spending. Now, if Meta is starting to lead the way down, what if Google starts following Meta? What if then Microsoft starts following Google? And then they start following each other, and market participants, they change their mind, and they believe that they're just spending too much and they're not finding financial results from those investments. And we could easily have a 15-17% pullback on that alone, with a Magnificent Seven making 31% of the S&P 500. So this is another thing that could potentially happen. And Meta maybe is giving us an indicator of something that's happening and something that could potentially come in 2026. So to me, this is very, very interesting. But there's another pattern that's interesting to me that I have seen in 2021, and I have seen by studying other market crashes, and I'm seeing it again. And this is the massive outperformance of the NASDAQ relative to other, you could say, traditional, boring, non-exciting stocks. So the NASDAQ is up 34%. Waste Management is down 14% over the last 6 months. Costco is down 9%. AutoZone is down 1.5%. Berkshire Hathaway is down 10%. This kind of divergence in a bull market so far doesn't really happen very often. It tends to happen whenever, and mainly the last time it really happened in a major way was in 1999. It did happen in 2021 in a certain way where I noticed that, mainly with BTI and a few other stocks, but it did happen in 1999. And this is a chart of Berkshire. In the same day when Berkshire made a new pretty much 52-week low, the NASDAQ has made a new all-time high. Why? Because people and investors, they were selling Berkshire to buy Pets.com and to buy a lot of the .com stocks. And now investors are selling Waste Management, they're selling AutoZone, they're selling Costco, they're selling a lot of those companies because they're not exciting enough, and they're buying only the AI-related stocks. If you're a dividend investor, if you own anything that has no AI exposure, you're pretty much doing nothing this year. Maybe you're up 5, 8, 10%. You're not up 20, 30, and 40, and 50%. So normally whenever these trends happen, it tends to happen before like the final upward move in the market. And then the following year, it tends to reverse. And then the money will come out of whatever is really exciting. And it will start going into a lot of the boring stocks that have sold in the prior year, like Waste Management is selling off this year. And a lot of those stocks which don't sell off very often. Something else that I'm watching is the dollar index. The dollar index is at a critical support level, and it has held it since 2007. Very important. Now, back in 2021, it hit the support level. That was kind of when the markets have started peaking, and they started slowly reversing from that. And since then, the dollar has rallied in a major way into October of 2022. And this is when the market was crashing and we bottomed around October of 2022. Now we're at this support level again. And this is a reason why the market's up so much, is because the dollar has been going down so much. Now, if the dollar is at a critical support level, and if it starts going up from here, I can hardly see the S&P and the NASDAQ keeping up this momentum while the dollar is rallying at the same time. It could happen, it's really rare, but I doubt it's going to happen, and I doubt we're going to see the momentum that we're seeing. So maybe the dollar is also telling us that maybe a reversal is around the corner, and maybe we should pay attention to all those indicators combined together. Now, if we really look at sentiment, if you want to really bet on any major pullback or any kind of pullback in general, you need to have extremely bullish sentiment. But if you look at the fear and greed index, it's at fear territory. And I think you guys could agree with me that the indicator is broken, it doesn't work, and it's pretty much useless. We're not at fear territory with, I would say, Palantir trading at, 200 times sales right now, or 150 times sales, and a lot of those companies trading at crazy multiples. We're definitely not in fear territory. But because I'm on YouTube, and because I have a group of over 1,100 people, I'm in a good position to assess sentiment in general. And I believe the sentiment right now has massively shifted to the bullish side, where investors are no longer worried about a pullback, they're no longer worried about protecting their portfolios, but they're more worried about missing the upside than protecting the downside. That was not the mindset that I was seeing from March to, I would say, July, August. I was getting questions if we could have a potential crash, if we could have a pullback, what if we should buy the stock, what if we should buy put options. I'm not getting any of those questions right now. I'm only getting questions of how we could capture more upside and what kind of stock could explode next. No questions about a potential crash or pullback or buying put options, none of those things. And to me, this is a good indicator in general. Now, in terms of the timing, because everyone likes to say that we're going to have a crash, we're going to have a pullback, but no one likes to say when. And I always like to put a timeline on whatever I say so I can hold myself accountable. So if, for me personally, the way I look at it is we have the midterm elections on November 3rd of 2026. And I highly doubt they're going to let the markets go down into an election year, okay? So if something bad wants to happen, it has to happen, I would say between now or between January and maybe April, May, between at least June, because from June to November, they likely want to juice up the markets and make up some kind of rally. Maybe they're gonna have a new Fed chairman that listens to Donald Trump and he's gonna do something to juice up the markets. You never know what they would do. They have a lot of tricks, but I would not be betting on a down market in the second half. So there's two outcomes, okay? The first outcome is right now we have a lot of momentum. We're trading at crazy high multiples, and we keep going up November, December, January, February, March, April, all the way into November. We don't have any pullbacks. Do you believe this is likely? Or do you believe the more likely setup, after everything I showed you, and on a more rational basis, that we will likely have a challenging first half and a very good second half? I think the most likely outcome is a very challenging first half where we could have a pullback, maybe not a major one, and a very good second half where we recover most of the pullbacks that we had. Now, I'm not calling for a dot-com crash or anything crazy. What makes me not want to do that is that OpenAI's IPO is mainly going to be in 2027. If it was going to be in 2026, I would say, okay, that looks good to me. That's like the highlight of the bubble, and there's no catalyst like the midterm elections, but I don't see how we're going to have a dot-com crash into the midterms. So I see a short pullback and then a recovery, but I think there will likely be amazing buying opportunities in the first 4 or 5 months of 2026. Now, what am I doing about it? The first thing I'm doing is I'm building a cash position. I'm not entering 2026 without a decent cash position, at least 10% of the portfolio. I don't care about missing on more upside and doing all those things. I want to have at least 10% cash. So this is what I'm doing. I also had a good year. Not as good as a lot of you guys, but I had a good year. And last year I was up 54%. This year I'm not doing too bad, and I'm satisfied. And I'm going to enter 2026 with a decent cash position. The second thing I'm likely going to be doing is hedging some of my growth stocks with put options. So I own a lot of hyped up stocks like Robinhood, and I own some SoFi also, and a lot of them are just too expensive. So I likely buy some put options and hedge against them. I'm not entering 2026 without that, and that's something that I do. The last thing that I'm doing in my portfolio is owning non-index or defensive kind of stocks. And this is something that's not really talked about a lot on YouTube, because most of the videos on YouTube, they get a lot of views if we talk about the most well-known stocks or any index itself. But there's a lot of gems outside the index that don't really correlate with the S&P too much. So you hear a lot of comments that NVIDIA is keeping the market alive. That's not true. It's mainly keeping the well-known stocks alive. There's a lot of stocks outside the index. They couldn't care less about NVIDIA. I had stocks in January to March, April. Again, you could see it from my chart from Interactive Brokers. I had stocks that went up 25% from January to April as the market was going down. This is a non-index stock. It does not care about the index. It's going to do well based on how the business is doing and not based on the inflows and outflows of the S&P 500. So I'm having some more of those stocks in my portfolio and some defensive names. You could say, you could get some ideas from the stocks I showed you, like Waste Management is starting to look good. Costco is too expensive. AutoZone is starting to look good. Berkshire Hathaway is starting to look a little bit better. And there's a lot of stocks to research at 52-week lows that look really good. But if you want to join me on this one and potentially position for that like we did from 2024 going into 2025, you can potentially join my group. This is the link if you're interested. But thank you again for watching. Hope you got some ideas. Hope you enjoyed it. If you did, please press the like button and maybe consider subscribing. So I'll talk to you in another video.